So after chapter 5, hopefully you learned a little bit about when gross income is recognized and when it isn't. And I thought I'd go over some of the discussion questions at the end of the chapter. Very common. You hear this when you're doing taxes or even when you're just talking to someone and they're like, well, I just, traded this for that so I don't have to pay tax on it. And so if we look at discussion question at the end of the book, it says, Tim's a plumber who joined a barter club. And those are very common. Well, they're not very common, but they're out there. Barter clubs. Barter, rather than paying each other, we pay each other in services. So Tim exchanged plumbing for a new roof. The roof is properly valued at $2,500, properly being the key word there. But Tim would have only billed $2,200 for the plumbing services. What amount of income should Tim recognize on the exchange of the services for a roof? Would your answer change if Tim would have normally billed $3,000? So it doesn't matter what Tim would have billed, it's what he received. And he received a roof that was properly valued at $2,500. So that is the gross income that Tim should recognize on his tax return. And then in the one right under that says Andre constructs and installs cabinets, Blair sells and installs carpet. Andre and Blair worked out an arrangement whereby Andre installed cabinets in Blair's home and Blair installed carpet in Andre's home. Neither Andre nor Blair believe they are required to recognize any gross income on this exchange because neither received cash. However, they performed services. So do I agree with them? No. They both have to show income equal to the amount of the service that they received. And so, again, you hear people say, well, I didn't get any money, so I don't have to pay tax on it. And that's not true. If you perform a service and you get paid in property, anything that's of value, then you have to pay tax on that. So, again, if it's your client, you're giving good tax advice. If you're just overhearing someone talk about it, you want to say something, but you can always direct them to the IRS guidelines that explain that to them, or you can quote them out of your textbook, whichever you choose to do. So we are getting ready to move into Chapter 6 now and talk about deductions.